Well, hello everybody. Welcome to our question and answer session on making tax digital, income tax self-assessment. The idea of this is to be a question and answer session, not just me droning on about making tax digital and how it all works. To some extent, I would assume that people know about making tax digital for VAT, but if anyone's got any questions, just ask the questions. Now, let me explain a little bit. Let's get a web page up. My computer's full of different things at the moment. If we remember this particular story, if anyone actually saw this story, even the chief executive of Zoom in June, when talking to his investors, forgot to unmute his microphone. So if you have any questions, first, could you put them in the group chat so we know that you want to ask a question? And then we'll make sure that your microphone is unmuted so people can hear you asking your question and any further questions. As I said, specifically, this is about an opportunity to have questions and answers rather than necessarily just me droning on about it, because that's useful to people. So anyway, to move on, I will be sharing my screen. So let me just go into a screen share to look at some of the recent news and issues relating to making tax digital. So let's have a look at things. That's the one I want. Okay, now we should hopefully have, yes, what we have here on the screen is the written statement in the House of Commons, which was made by Jesse Norman on the 21st of July. And that was the confirmation that making tax digital will become mandatory for a range of self-assessment taxpayers, self-employed people, etc., from a particular date. Obviously, the page is there for anyone to read if they wish to, but the point is that making tax digital would therefore become mandatory for anyone with an income, a turnover, not a profit, of over £10,000 from the tax year April 23-24. There is a very slight complexity as to if people have adjusted their tax year so that it fits more so with the end of month. So it's from the 1st of April to the 31st of March, as to whether it's mandatory at that time or not. But this is the main thing, is we're working towards this particular objective, which is the financial year 23-24. Now, obviously, there are all sorts of issues relating to making tax digital. And I think it's worth looking at the question of how do other countries do this sort of thing? Because people have had various debates about the way the UK does it. And it's useful, for instance, to look at what the OECD do, which is a coordinating group for many, many countries. And they have a system called SAFT, which is SAFT here. And that's Standard Audit File for Tax. And that's been adopted in Italy and Poland. And you can see, here's a nice page done by Deloitte, which looks at how SAFT works. And what actually happens then with Italy and Poland is all the invoices are sent to the tax authority. And I think if you present people with the question of whether they would prefer a system where just the totals are sent to the tax authority, or whether they prefer a system where they have to send a complete copy of all their invoice and expenditure to the tax authority, I think people would prefer the making tax digital approach, which is not to send all the individual transactions, but just to send the totals. So, as I said, I think a lot of people will have experience of doing VAT returns using making tax digital. And when the VAT returns came in, essentially all that happened was that the VAT 100 form, which was 9 boxes initially on paper, then moving to typing it in on an online system, then was submitted automatically from either bridging through a through a spreadsheet or directly from the accounting system. The principle is much the same for self-assessment, which is that people will submit the total figures rather than submitting all the details or anything else like that. For the purposes of VAT, the idea is that you have digital links so that the totals are automatically calculated and sent to HMRC. Obviously, the same principle will apply to self-assessment. The difficulty with self-assessment, as we all know from the number of different self-assessment tax returns, is that there are a lot more figures. So if you think about even SA 103S or SA 103F, a lot more information is provided to HMRC. And as a consequence of that, it's not just 9 figures. And if we look at the situation with software providers at the moment, just for curiosity, if you search for VAT providers, then you'll find that for businesses, there's like 500 plus different companies that provide systems that way. For the purposes of income tax, there are actually only 6 at the moment. Whether that number 6 will obviously go up because some of the larger people will do it, but doing MTD for income tax is a lot more complex, a lot more detailed than doing it for VAT, simply because there are a lot more boxes. And because there are a lot more boxes to be sent off, there are actually more submissions that need to be sent off. So this I'll show you here, which is part of HMRC's documentation. It's all available publicly if you want to look it up. And if we look down the page here, we can see VAT. And this applies, the point about what I'm explaining is it applies to all MTD suppliers. So whoever's using MTD will have to do these interfaces. So if we look at VAT MTD, there are in fact only 5 interfaces. One of which is finding out what obligations, what VAT returns you've got to complete. Another one is submitting a VAT return. Another one is to look at a particular return that you've previously done. Another one is finding out what the liabilities are either way. And another one is VAT payment. So it's quite straightforward, nice, there's only 5 particular items. Income tax, however, because of there being so many more boxes that you have to fill in, there are actually a lot more, and all of these are relating to income tax here. So if we look at obligations, for instance, you've got these pieces of information on obligations, and then self-assessment, these pieces of information. Now, here we look, for instance, at self-employed businesses, where you need to find, somebody may have more than one self-employed business. So if they've got more than one self-employed business, they're going to need to submit figures for each self-employed business, for instance. So if we look at what that means in practice, I can take an example. I'm going to share a different screen now. So if I could just do a new share. Let me get the right page up. It's not done that. Try it again. Have we got a new share up? Not yet. It's not doing it that way. I'm going to try doing it a different way. And actually what I need to do is to move through to this. So if we look at a VAT return, you submit the VAT return figures. So that's straightforward. If, however, we look at a self-employed quarterly return, obviously people are well aware that for self-employment you're supposed to do quarterly returns. The deadline for doing the quarterly returns remains the 31st of January the next year. But obviously people recognize all the different categories that there are here for self-employment. But there's also potentially, if you've got furnished holiday lettings, you've got figures there. and if you've got other property, you've got figures there. And then on an annual basis, you may need to submit dividends. And on an annual basis, you may need to submit interest on savings accounts. And then on, again, for furnished holiday lettings, you may have an annual submission. Now, the point about these, it's very much like the self-assessment returns themselves, which is that if you haven't got that sort of income, so if you're not a landlord, you don't have to do the landlord submission. But if you are a landlord and you either have furnished holiday lettings or you have other property, you need to do the submissions for those. And if we look again, for those people who have some experience, you'll see there's a slightly more detailed approach to this, which is a little bit more information is required than in the current essay forms. I don't remember exactly which number it is for self-assessment. Now, so it has its similarities to VAT because it works in a very similar way. So if we look, for instance, at the issue of granting authority, at the moment, with VAT, you will give authority to interact with HMRC for looking at VAT or changing the VAT information. Similarly, for self-assessment, you go through exactly the same process, which enables you to give authority. So if you're using an agent services account, for instance, you may have your agent services account may grant authority to some software to handle self-assessment, and you go through essentially exactly the same approach. Now, you may have looked at this. This is a useful page on HMRC's website, which allows you to see which software you've granted authority to, and if you wish to, remove that authority. And you can see here that this particular taxpayer, which happens to be me, has granted authority to Cirrus Stratus Exedra for self-assessment VAT and saying hello. Saying hello is an unusual API, which is just used really to test how things are working with HMRC. So you can see in all of this that there is a lot more detail. Obviously, there is a question, can you use bridging as opposed to using an accounting system? And the answer is yes, you can use bridging. It may get a bit more complicated because if we take, for instance, the issue of self-employment and expenses which are partially personal and those expenses which are partially for the business. So here, the phone bill has been put down as 50-50, partially for business and partially for personal use. And when you're doing the self-employed return, you have to provide the two figures for the, in the same way as you do at the moment, for what is the personal use and the private use. But obviously this is supposed to go back to digital records. So it becomes complicated in terms of bridging systems that you need to be able to analyze the bridging back to the original data in some way. But that's perfectly possible to do with spreadsheets. There's no difficulty there. But you might find it easier to use something that does all the work for you rather than having to set up all the digital links. So those are ideas on all of those things. Now let me see, have we got any questions at the moment? Let me just look at my thing. I'm going to stop the sharing. There we go. Right, so as I said previously, if you have any questions, you need to put those in the chat. And the chat is available if you type Alt-H, so you can see the chat there, or you can try and unmute yourself and we'll see if we can open things up. But in essence, making tax digital for self-assessment is very, very similar to making tax digital for, I'll just change the page here as well. So here we go back, so you can see me again. Making tax digital for self-assessment is very similar to the way it works for VAT, in as much as the authority works in exactly the same way as VAT, but you're authorizing people. So we'll go back to this particular page here. So you can see this page here where it demonstrates that the authority systems are exactly the same. Many people quite recently have found that the 18 months authority that works for making tax digital has been running out because people initially authorized VAT 18 months ago, and they have to therefore reauthorize it. Obviously, the same thing applies for self-assessment. There are discussions about what will happen with corporation tax, and at the moment there's a consultation going out. Now, my personal recommendation to HMRC will be to keep using IXBRL, because there's no reason necessary to change that, because that does provide all the digital links if it's done properly and in the correct way. And I don't see any reason for them doing VAT, doing corporation tax the same way. But when you come round to self-assessment, in essence, what's happening is that HMRC are building up a copy of the tax return on their computers, and you gradually give them bits of information. I think one of the questions that bookkeepers and accountants will have to look at is, what do they get signed off by their clients? Because obviously, if you're doing lots and lots and lots of submissions, it's probably a bit of a faff to actually have to get it formally signed off each time by a client. Now, there is a big difference between self-employed submissions and VAT submissions. And the big difference is that self-assessment submissions can be amended. So one of the reasons why there are a lot more APIs, a lot more API methods, is they can be amended. So until the tax return is finalized, there isn't necessarily a massive problem, because whereas with a VAT return, when you submit it, that's the VAT return and that figure has to be paid. And any adjustments then happen on a later VAT return unless they're over £10,000. However, for self-assessment, the tax is sorted at the end of the year. So, and there's a process called crystallization, whereby you confirm what the figures are on the tax return and whether those are the correct figures and whether that's how the tax should be calculated. I think there is a reasonable argument for bookkeepers, for tax agents more generally, that we would go for a sign-off on the final figures, not each quarterly figure. There is another point to be made about quarterly figures. If you do monthly accounts, then you can actually submit each set of monthly accounts either for a landlord or for a self-employed business or for a furnished holiday rental landlord as a monthly figure. And then HMRC will add those up to be the quarterly figure, the quarterly obligation. Now that brings us, in terms of doing accounts, to one key takeaway from this that I think it's very important for people to recognize. As it currently stands, HMRC don't enable changing the tax year during the tax year. So when you set things up, at the moment they can't change it during the year. So it's quite important to make sure you get the right tax year, the one that creates the minimum amount of effort at the start of the process. Because obviously, if you're doing VAT and income tax, it's much easier if you can use the same periods for VAT and income tax rather than doing different periods. And if you're submitting things either monthly or quarterly, then it's much easier if the quarterly submission for VAT has the same period end dates as the quarterly submission for self-employment. You need to think of that well in advance, because it may require changing the VAT periods, or it may require changing your tax year. Obviously, the fact that HMRC treat the financial year 1st of April to 31st of March as same as being in the tax year is helpful from that point of view, because it is possible to simply produce quarterly figures for both VAT and self-assessment to the same range of dates and submit both of those. However, it's something that does need to be thought of in advance, because otherwise, if you find yourself part of the way through the year and you're having to do two separate submissions for one set of year-end period end dates and another set of period end dates, then that gets particularly difficult. So that's one thing that needs to be thought about very carefully before going ahead. My recommendation for tax agents is to try, where possible, to get submissions for self-assessment done for one of their clients at an earlier stage, just to learn how the systems work. It's very much similar to VAT, although a lot of people now have learned how the authorization process works, and they've learned how to do it all. If you can learn it all on one account in one go and then deal with everything else in a later tax year for your other clients, that becomes a lot easier. So there is a point there. However, it is important to note that in this tax year, that the situation is challenging for people in self-employment, because obviously we've all had this problem with the virus, and many people have made claims from the government for funding self-employed people on the back of the virus and its impact on their businesses. However, HMRC have not changed its MTD for this tax year, 2021, to include that revenue. So if a taxpayer has made a claim to HMRC in this tax year for self-employment support or for anything else related to the virus which should appear on the tax return, the ability to put that in the tax return does not exist this year. Hence, it's only really in the next tax year that that becomes possible. But then again, you see, if you're talking about the tax year 23-24, there's a good argument that you don't need to do it too far in advance, but it is worth doing. And obviously, we are doing it now. And if you do it when it's less pressurized, life becomes a lot easier. So I do recommend people consider doing at least one client in advance so that the others follow on, because that will make everything a lot more easier. But I think at that point, I have done quite a big run through. I would like, now we have a few more people here, I would like to thank the Bookkeepers Forum for agreeing that this would be a joint event. And obviously the Bookkeepers Forum can be found on the internet for bookkeepers. I hope everyone's doing well given the virus situation, and everyone's coping with that, and everyone's quite healthy. And I would now want to give a little bit of time just to see if anyone has any questions. And as I explained earlier, it's quite possible that when somebody tries to use the system, that we have a bit of a hassle just getting the sound system to work. So we'll be a little bit of a patience on that. But does anyone have any questions? Well, I'm not actually getting any questions. Whether I've sort of bamboozled people too much with a volume of activity. On that point then, I'm going to end this conference as an introduction to making tax digital, income tax and self-assessment, and thank everyone for attending it. If you do have any questions you want to raise with me, obviously you can email me at john@hemming.email. And thank you all for attending. We'll end the conference now.